What about Bitcoin as money, Bitcoin as payments? Where are we? Are we on a path that will establish Bitcoin also as the digital money, the money of the future?
Yes, I think it's a very interesting thing to think about. Bitcoin has achieved a lot of success in its first 16 years by being a store of value and a medium of exchange, right? When I think about the future of machine-to-machine payments, I think that a lot of that should be based in Bitcoin, right? The native money of AI robots will likely be Bitcoin. I believe in that future.
Hi and welcome to the Financial Fox, where I dive into the big questions about how technology can empower us, what's next for finance, and how to invest smarter. All fueled by my curiosity and a deep passion for freedom and innovation. I'm your host, you can call me Steffi. I've been investing and working in crypto since 2017, and I have over 10 years in the finance and investment world. This show is about bringing you my conversation with top thinkers to spark new perspective and empower you with the knowledge. It's Easter weekend 2025 and the economy is feeling the squeeze. Trump tariffs are stirring up trade chaos, markets are all over the place, and Bitcoin is standing firm at around $80,000 and becoming a symbol of a new kind of financial freedom. Today we are unpacking why the whole system is falling apart and how Bitcoin is pushing back with a special guest that has been doing an amazing work to educate others. He is Nik Bhatia, former bond trader, university professor and founder of the Bitcoin Layer. He is also author of two incredible books, Layer Money, which I read a few years back and I consider a great analysis of the history of banking and also a way to understand money from gold to fiat and finally to Bitcoin. His second book, Bitcoin Age, out last month, is a deep dive into the Bitcoin technology and the innovation that it brings us. So really excited to have Nik here. Before we get into the interview, a couple of things. If you are watching our interview, please take a moment now to subscribe to our YouTube channel and follow Financial Fox on social media if you haven't done so already. You will find all the links in the description. Remember, your support is crucial to grow the channel so we can educate more people about crypto. And please remember that all the content in the show is for informational purposes only and not intended as financial advice. Any opinions expressed by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your own decision. This show is supported by HIVE Digital Technologies, and more about them later on the show. Nik, so glad you are here. How are you doing?
I'm doing very well. Thank you for having me.
Oh, well, that's your second appearance on our show, and it's brilliant. You know, I just finished reading your new book, Bitcoin Age, and I think it's such a brilliant book. So I said, let's get you back on the show. Let's revisit the big problem, of our economy, our financial system, our world, and then, bring up the solution that Bitcoin is providing. It's all about education, right? All the work that we do is about trying to onboard more people to this new technology. So you are doing such great work. So yeah, really glad that you're on.
Thank you so much. I appreciate you having me back.
So let's get started with the main focus of your first book, Layered Money, which I thought was also a brilliant book about the story of banking. And I learned a lot actually from that book and how we consider money, the evolution of money as well. So tell my audience, what is the problem?
Yes. So in Layered Money, what I want people to understand is that money takes different forms. We have commodity money, which is something that people understand inherently, that a gold coin, a piece of gold that has a denomination on it or a president or a king, that piece of gold is money and it has value. then people also understand that a piece of paper, even if it doesn't promise to pay gold, but it just says this is credit from the Central Bank of the United States or the European Central Bank, that is also money because you can spend it places. It's accepted. And you can buy goods or services. You could even buy gold with it. So money takes different forms. And in that formation of money, we can actually trace the history of it to demonstrate that money has a hierarchy or a ranking. And that ranking is rooted in accounting. So balance sheet relationships, assets and liabilities, meaning the gold coin issued by a country that has a certificate that promises to pay the gold coin issued by that country. Actually, those things exist on opposite sides of the balance sheet because the country has the gold coins in their ownership, but then they issue paper currency, which are promises to pay those gold coins. Now, without gold in our financial system since 1971, with no gold in our financial system is entirely a credit system. And that credit system also has a ranking. So your deposit at your bank account, it's money to you. It's an asset to you, but it's a liability to that bank. And that bank has assets that are liabilities of central banks or of governments. And so in this way, we have layered money. And Bitcoin is so unique because it is not a liability, nor does it have any layered framework when it comes to the existence of it being money. It is simply like gold, as if it came out of the earth and was valued by our species. And that's the way to think of Bitcoin. It is a digital creation. It comes from math. It comes from rules, just like gold has chemical properties. Those rules are present. There are rules present in Bitcoin. Bitcoin has properties. Those properties are mathematical in nature, and they are recognized by people to have value. Now, in my book, Bitcoin Age, that I just published, I lay out the 7 rules of the protocol that I believe are what people recognize as the value. But that value recognition is subjective. I give an example in my book, Bitcoin Age, about Picasso paintings and sketches. A Picasso painting can cost millions of dollars, and a Picasso sketch can cost $10,000. But is the difference color or the time that he spent? No, because some of his sketches can go for $1 million, while the paintings can go for $100,000. And so there are sketches that have more value than the finished paintings themselves. And that is because value is subjective. It's in the eye of the holder or the investor or the person. And so Bitcoin has this development of its properties. I shouldn't say properties. The value that is recognized by people has developed over time and strengthened. We can see that with the price. The price goes up and down, but the long term is up. It means that more people see it with that value attached to it. And so to go back to layered money, Bitcoin as a non-liability asset has only one comparison or example that we can take from in all of finance, and it's gold, because gold is a universal non-liability money. So there's only one asset that we can really compare Bitcoin to in this layered money framework, and it's gold. And the reason I wrote that book at that time was to explain to people, it was really to answer this question that Bitcoin is another PayPal. No, it is not, because PayPal is a lower layer of the layered money framework. And so you can transfer Bitcoin over the internet, but that has nothing to do with PayPal or any financial services provider that uses dollars or fiat currency. They are not the same thing at all. And layered money helps us explain that with the balance sheet framework.
Now, I'd like to introduce our partner, HIVE Digital Technologies, a publicly listed company building the next generation data center infrastructure with 100% renewable energy. HIVE was the first crypto miner to go public and the first one to have an AI strategy. With over 2,600 Bitcoin on their balance sheet and operations in Canada, Sweden, Iceland, and Paraguay, HIVE is fully committed to transforming communities, rebuilding rebalancing the energy grid and delivering value to shareholders with a low dilution and cash focus approach. If you don't know HIVE, check them out at HIVE Now, back to the show. Brilliant answer. Listen, I'm going to try to play devil advocate because obviously I'm talking to different type of people. Some, they're supportive of Bitcoin already. Some other, they're still quite skeptical. And you just brought up gold. And that's why I want to ask you this question right now. They would say, right, money, what is backing Bitcoin? So what is backing gold is, a piece of metal that has got value, it's subjective value, but the market gives, that kind of price is recognized, is tangible, right? And those detractors would be saying, what is behind Bitcoin? Nothing. So, is all speculation, right? What's your answer to that?
Yes, the tangibility of Bitcoin is something that only if you understand the software, you can start to see that it is tangible. And I take this concept from Trace Mayer. He's a researcher that was part of my Bitcoin education back in 2016. He explained that the word tangible or tangent comes from geometry, meaning something that is touching, right? A line that touches a circle and only one place is hitting that circle at its tangent, or that point is a tangent, right? So it's numerical actually in nature. And the tangibility of Bitcoin is built into the software rules. So the way that I answer that question is explaining that Bitcoin describes two things. It describes a software protocol that you can download and install on your computer and run the software. And then it also describes the unit of account within that software. So when we say the price of one Bitcoin is 88,000 US, we're actually talking about the unit. We're not describing the piece of software. When we look at Satoshi Nakamoto's earliest writings about Bitcoin, he actually said, I have this software protocol. It's called Bitcoin. It's a peer-to-peer decentralized cash. And inside the software, you have coins. He didn't call it Bitcoin. He just called it coins. Over time, we called those coins Bitcoins because it was in the Bitcoin software. So I have to explain that first to people so that they understand. Bitcoin is the name of a unit within a software that's called Bitcoin. Now, the software called Bitcoin has a set of rules. It is, of course, the coins and the price of them is based on speculation, but actually acquiring those coins through the Bitcoin protocol, which is called mining, is not an easy process. It's a difficult process that takes electricity and specialized hardware. In the beginning, not specialized hardware. You could do it on a laptop, but you still needed electricity. Now you need electricity and a specialized computer to do this. And even if you have electricity and a specialized computer, it doesn't guarantee at all that you actually can generate coins for yourself. In that way, Bitcoin has tangibility because it cannot just be created from nowhere. It must be created following a mathematical process, rules. And those rules by which Bitcoin comes into existence via the mining process is the tangibility. The more technically, if people want to go, learn about it, it's called proof of work. And in my book, Bitcoin Age, I explained actually the history of proof of work going back to 20 years before Bitcoin, or about 10 years before Bitcoin ever came into existence. And proof of work it's a unique cryptographic process. And so if someone wants to say that Bitcoin has no tangibility, unless they can describe why the mining process is not tangible, then I don't believe that perspective is coming with the proper set of education.
Yeah. Maybe it can be summarized an energy back assets or energy back money, maybe, to kind of like make it more digestible.
And it is energy, but it's energy plus the cryptographic design.
Yes.
Right? You need energy to run the computer program. And so they go hand in hand. It's not just energy backed. It's energy and cryptography these cryptographic hash functions. That is what gives it tangibility. It's the two together.
Now, I don't want to tell too much about the book because obviously, people should actually read it. It's not too long. You can probably read it in a week if you kind of deep dive into it. But I thought that what was very interesting was the way that you break down Bitcoin as a solution. You have explained very well the content in the white paper, bringing in some conversation from Satoshi, Adam Back, and Al Finley. But maybe you could go through the key ingredients of Bitcoin.
Sure. So yes, a lot of the ingredients are cryptographic in nature and come from the 80s and the 90s. One of those key ingredients is public key cryptography, which is the root of all modern encryption, and that came into being in the late 70s and early 80s. That existence of public key cryptography and the solution that it solved, which is the digital transfer of information encrypted, where you can't steal the information even if you are able to read the message. That is based on ancient practice that we found in ancient Greece and even before, where messages could be sent across hundreds of miles but encrypted. So if the messenger was attacked, the secrets of the message were not revealed. So it's a very old practice that we've instituted into the internet. That's a foundational part of Bitcoin's ingredients. Understanding that really helps us to see that Bitcoin, it's not something random. It's something that was worked on for decades. And it also is such a crowning achievement that you can't just go and reinvent Bitcoin or come up with something better. One of the things that I didn't want to do is just give this example of alternative cryptocurrencies and why they're not as good as Bitcoin. Instead of doing that, you just explain actually how many decades it took to create Bitcoin and the problem that it solved, so that people aren't actually thinking that, oh, we need to solve this problem again, or it can be solved in a better way. We solved it, this decentralized trust network of transactions. So I think that's very powerful. Another key ingredient for Bitcoin is now it's more explicit, but previously implicit protection of Bitcoin under the First Amendment of the U.S. Constitution. That is something I think needs to be understood more, because Bitcoin is based in computer science that has been protected by the First Amendment. We had a series of cases in the 1990s called the Crypto War, culminating in a 1999 case that actually made it into both books. That's how important it was. But this Daniel Bernstein case of 1999, the several federal judges had to rule that mathematical models and that economists use in their research and Bitcoin or encryption, which is also a mathematical tool, that they are one and the same and are both allowed under the First Amendment and protected by the First Amendment. That is a long way from what was the situation in the 1960s, which was that all encryption and the science of encryption was conducted within the NSA, an intelligence organization of the US government. And once the public started to learn about some of the encryption tools that the NSA had developed, the cat was out of the bag, and the desire of the public to scientifically explore this new frontier was so strong that it actually ended up in a war between academics and the intelligence agency of the US government. And the government lost. The government lost this war to the public, and through that, we have publicly available encryption, PGP, which was mostly programmed by Hal Finney, the first Bitcoin user after Bitcoin. So actually, Bitcoin, its first non-Satoshi user, was one of the main architects of our privacy tool that we were awarded with after, or basically during the middle of this crypto war with the government. So there is a deep connection with freedom of speech, the First Amendment, and the U.S. Constitution between Bitcoin and encryption. And this is why, actually, the idea 5 years ago, you would hear a lot of, well, what if the Bitcoin gets so popular that the government bans it? Those people did not read the judicial ruling from the 1999 Bernstein case. There's no way they could have, because if they had, they would have seen that encryption is already protected by the government. And now we are starting to see policy follow closer to that original ruling, to the point where if you had any law that came and restricted Bitcoin in the United States, it would have gone to court and it would have been defeated anyway. So I think that there are some key ingredients that go decades prior to Bitcoin that will give people a better understanding of that Bitcoin is not just a trend or a fad, but more like a 100-year plus technology.
And it's interesting how it's intertwined with governments, and now seeing obviously Trump administration being so pro-Bitcoin is quite interesting. Now, obviously, there is a lot of chaos now in the market with the tariff trades, and actually Bitcoin is holding quite well. How do you see Bitcoin in the next year? Because I think now we are kind of like a crossroad, right? So Bitcoin is standing quite well. The market has been crashing, but Bitcoin hasn't been crashing like before. Do you see now kind of strengthening its resistance and maybe emerging as, the winner of this tariff trade, and maybe link it up with the support that Bitcoin is having from the US and other nation states as well?
Yeah, so the desired winner of the tariffs are the American middle class and industrial base. That is the motive of these moves. And so, I know that the tariffs and the trade war probably bring a lot of uncertainty to people. But if they're able to see what the origin of the ideas are, I think that will help people. That's something that we're doing at the Bitcoin Layer, my research firm. And I've done a few episodes over the last couple weeks on this matter itself to explain to people that actually the institution of tariffs on imports into the United States are basically in their primary function meant to prevent dumping and help U.S. industrial base at the margin. So that's the global macroeconomic approach that one needs to take in thinking about the trade wars. Now, Bitcoin, and how is Bitcoin impacted by this? Well, what is the reason for the hollowing out of the U.S. industrial base? The reason of the hollowing out is you have competition coming from abroad. And that competition coming from abroad makes us, as a U.S. country, import goods and export dollars. When we export those dollars, and those dollars are recycled into dollar assets, such as U.S. stocks and U.S. bonds, that dollar recycling into U.S. assets prevents the appreciation of those local currencies. It actually gives the dollar an extra bid. It keeps it strong. And that 50-year trade deficit means a 50-year capital surplus and 50 years of the dollar not depreciating in accordance with global trade patterns. There was no balancing effect because of dollar recycling. Now, what do you see since the trade war has been launched and since Liberation Day? You see the dollar versus the euro versus Japan, and to a lesser extent versus China, depreciate. The dollar is getting weaker versus the euro. And in that move weaker in the dollar, what you are seeing is a boost to gold and Bitcoin prices. So that is the connection to Bitcoin, is that if we have less export of US dollars, that's one, and then less recycling of those dollars into US assets, the trade flows of the world are then less dependent on the United States importing goods and services. And so, again, it's a little bit several steps to connect to Bitcoin. But what that makes Bitcoin and gold both more positioned to be neutral reserve assets as opposed to the Treasury, US Treasury security being the reserve asset of the world. And so if there are less treasuries held as the reserve asset of the world and more gold and more Bitcoin, then Bitcoin can benefit in a reordering of trade And just so that I can summarize it for people, the desire to build back the US industrial base and the holding of US treasuries abroad are two sides of the same coin. They are actually the same issue. And dollar strength that prevents US competitiveness is the result of those two things. And so if we don't have that dynamic, or that dynamic we're trying to reduce it, that means less dollar strength, more dollar weakness, and potentially higher real asset prices.
But weakening the dollar is not being really good for US capital markets.
Yes, you can see it in the price of US stocks right now. You see a lot of uncertainty and you see selling. And when you see prices come down, what that means is people are leaving the market. And so at the margin, you had investors, whether they're domestic or foreign investors, you have investors that are taking their leverage positions off. And so this global financial markets are highly driven by leverage. And so when trades reverse and leverage trades are taken off, it happens very quickly. And so right now what we're seeing is a liquidation of US stocks relative to the last couple months, a steepening of the yield curve. So a lot of flight into the 2-year note, for example, flight into gold, and a move out of the dollar, out of US stocks, and out of the long end of the US Treasury yield curve, so 10 to 30s. And so and I'll be very honest with your viewers, anybody that says that they're able to say, oh, this is why the dollar went down or up, and it's because of yields or because foreigners are dumping, they're actually just theorizing. It's almost impossible to know in the moment who's selling and why. The best thing that we can do is look at price. So gold prices and the US dollar, and to a lesser extent US stocks, but the move lower in the dollar and the move higher in gold, the move higher in euro, that is pretty much the main takeaway that I have right now from what's happening. It is a desire for the administration to weaken the dollar. They need to cap the dollar to accomplish their goal of reigniting the US industrial base. I always like to say that, it's not that shoes are going to start being made in the United States again. Maybe one day, but that's not what's going to happen tomorrow, is that the factory leaves China and comes to the United States, or leaves Vietnam and comes to the United States. It's more an attempt to get US competitiveness going again. And you cannot do that with a strong dollar.
Now, I want to talk about the other side of Bitcoin, because we talk about Bitcoin as digital gold, store of value, but there is also another side. For example, Jack Dorsey is saying how Bitcoin will flop if it's just a store of value, and it needs to be the internet native currency. We've seen institutions, piling into Bitcoin, so that's understood. What about Bitcoin as money, Bitcoin as payments? Where are we? Are we on a path that will establish Bitcoin also as the digital money, the money of the future?
Yes, I think it's a very interesting thing to think about. Bitcoin has achieved a lot of success in its first 16 years by being a store of value and a medium of exchange, right? It has both of these functions. But actually, when you think about saving, you're just exchanging money with yourself in the future. And so I think that because you can use Bitcoin in transactions, that's enough. That's enough to give it this functionality. It's a payments network. It doesn't lose being a payments network just because most people don't like to spend it. It's still spendable. And now we have Lightning Network, which allows us to spend it instantly within the network. When I think about the future of machine-to-machine payments, I think that a lot of that should be based in Bitcoin, right? The native money of AI robots will likely be Bitcoin over the Lightning Network. I believe in that future. And with all respect to Jack Dorsey, Bitcoin doesn't need anything. It is a software. There are people that are building improvements to it, such as Lightning Network. 2017 is when that came out. And 8 years later, we're still making improvements, and they have a lot of improvements to do on Lightning Network to make it more usable or more destined to be the main currency used between AI and robots, going into the future. There's a lot more work that needs to be done. But Bitcoin can be spent. It is being spent hand to hand in different parts of the world and corners of the internet. it's an extremely popular currency for international gambling. That just goes to show you that it is already serving its function as decentralized internet money. But yes, Bitcoin is more used as it is used more as a store of value because people would rather give it to themselves in the future, not for a good or a service today. So I don't think that we need to stress how people use Bitcoin. I don't think that serves a purpose. I am more of the empirical study framework mindset where I look at it today and I say, how is it used? Okay, that's how it's used and this is the value. If Bitcoin's price starts going down because it's not used as a medium of exchange, then we can say, hey, this asset isn't being valued by the market. It's probably because you can't use it that well. Something like that. So I don't need to project onto Bitcoin what it should be doing in terms of, it needs to be used more as payment. Here's a big thing that I'll bring up. A lot of people in Bitcoin love Austrian economics. And Austrian economics speaks to how commodity money versus credit money, commodity money is more sound because credit money can be created. We all know this. This is a fact. It's not a theory. Right? But then a lot of these Austrian-minded people say, well, that means that we should be using, or that in the future people will be using commodity money like Bitcoin or gold. Based on what is what I asked them. Based on what do you see the credit system being replaced by Bitcoin, or that people are just going to be spending Bitcoin? The example I give in Bitcoin age is that if you have a young married couple that has great jobs, they're going to be earning a few $1 million over the next decade in wages or income. They show these offer letters to a bank and they say, we would like to buy a house now so that we can start a family. We can't afford to purchase it today because the house is $1 million, but we're going to be making $1 million a year for the next 10 years. And so will you lend us the money? The bank looks at their income or their offer letters and they think that this is a great deal because they will get their principal plus interest payment in the future from these people. The people are happy because they just got loan approval to buy a house, to give them the ability to start a family. That money was created out of thin air. Now you tell me how that is going to change, or that we're going to go off some credit standard and go on to a sound money standard where Bitcoin is the currency that the people use to purchase their house. You can make it a house or a car or any scale of purchase. It's the credit system that furnishes a lot of that economic activity, not commodity money, because then that couple would only be able to purchase a house if somebody with Bitcoin lent it to them. So how does that keep velocity going in the economy? You can say that I don't believe in that, but then you ask them, hey, how did you buy your house? And they probably took out a mortgage to do it. So it's not based in reality. I know that this wasn't your exact question, but it's an important point to make.
It is very interesting because the way that we can expand the economy is actually through the credit system. And it's kind of interesting also to see how we are bringing some of the solution that we have built in our economy to actually crypto, to Bitcoin, developing that kind of like financial solution that are available in traditional finance, like lending. And it's very interesting. I remember there was 2021 when I was thinking actually DeFi is a mirror of TradFi in crypto. And we will see where we go.
About that, the DeFi, if you're talking about then, okay, I'm lending out this currency, right? I'm creating credits and I'm lending out this currency. What currency are you creating and lending to people? And where will they be able to spend that? Nowadays, the only spendable money that people borrow are dollars. It's bank deposits. And if you get anyway, we don't have to get into the whole stablecoin credit system right off the bat, but if you want to think about what will the system look like in the future, if it's more Bitcoin based, it's not going to be Bitcoin credits that are being lent out.
Can you give us a glimpse into that?
Yeah, so I think that in the future, if you are under a Bitcoin standard and the dollar goes away, the way for that couple to buy a house is that they get lent Bitcoin credits. And the only way that the Bitcoin credits are spendable is if the seller of the house is willing to accept them. And so if there's a robust market between basically an altcoin, Bitcoin credits, and Bitcoin, let's say Bitcoin credits trade at 95 cents on the dollar for Bitcoin, then what you're doing is you're creating a money and a credit money parallel system where there's a price, it's visible to all, but the supply of the credit side of Bitcoin is obviously going to be fractionally reserved. And then you have a world where people can actually borrow Bitcoin credits and spend them. And if you collect Bitcoin credits, but you don't want credits, you trade those in for real Bitcoin in a liquid market. I see that in the future, but how soon is that system going to replace the dollar system? I can't actually see that in the next 5 or 10 years developing. I can't envision it. What I more envision is what happens today. Again, look at the empirical. There are lending companies. They take your Bitcoin on collateral and they'll lend you 65% of loan to value at 14% interest. And now you have freshly created dollars. Actually, a lot of these lenders are just syndicate letters, so they have to have an existing pool of capital to lend out. They're not actually creating money. We see Coinbase applying for a US banking charter today in the news. So you see that Coinbase wants to issue dollar deposits. They want to create money and they want to create dollars. They're not trying to create a new credit Bitcoin or a new altcoin to lend. They're trying to get a banking chart. That goes to show you what the future looks like. It actually just looks like Coinbase getting approved for a US banking chart. That's what the next 5 to 10 years looks like. And what are they going to be lending when they create money against your collateral? US dollar deposits.
What's the role of altcoin in the Bitcoin age?
I don't think there is one.
Nik, we were chatting before the show about your classes at university, and you were telling me that you're going to be teaching a Bitcoin class. So that's quite exciting. Tell us a bit about it.
Yeah, so I teach at USC Marshall School of Business here in Los Angeles. I've taught since 2019, and I've been teaching fixed income for that time horizon. I love teaching fixed income. It's my background. I was a bond trader. I traded US Treasuries. I traded US Treasury repo. And being a repo trader really gives you an insight into how the dollar system works. And I was on the buy side, which means I was trading on behalf of institutional clients, facing Wall Street, getting to engage with the sell side on a daily basis. And those were the foundational years of my really honing my craft as a money markets analyst and as a US rates analyst. And that's what I teach at USC now. I teach fixed income and I teach money and the monetary system and money creation as part of my class. And I really do love to teach fixed income and money and the monetary system. Then after a few people at the university read my book, Layered Money, in 2021, I was offered to start teaching a new Bitcoin class, which I've done a few times now, and I'll be teaching it again this summer. It's going to be a revamped version of the course, as now I have a second book to teach and use in the curriculum. And I love teaching Bitcoin too, and teaching Bitcoin helped me formulate the narratives in Bitcoin age. Layered Money was written as a response to having to design my fixed income curriculum. I took it over in 2019, and then in 2020, I made it my own, right? I made it my own class, and I wrote Layered Money to give the students my best explanation of money hierarchy, which is how we understand money from the academic side. And Bitcoin Age is a response to having to teach students about what is Bitcoin, where did it come from, what's the origin. I have to teach them everything that I know about where it came from. Then, I have my research platform to continue ongoing education, but to give people that foundation, that's where my second book came from, is having to formulate that class.
It's brilliant to have, actually classes that teach about money. And And it's great to have them at university, but really we should teach about money, when to children, to young people, rather than wait until they are at university. They've got their mindset. They don't know what the credit system is, right? They can't look behind the curtain, and then they have to rewind everything. But, thank you, Nik, for coming on the show and again sharing your thoughts, your analysis. And for anybody that want to know more about your books, I know they are on Amazon, but if you want to tell us where they can find them, and also about the Bitcoin layer, which is a very interesting tool as well to navigate what's happening in the world and why Bitcoin is an asset that everybody should pay attention to.
Yes, people can go find everything that I'm doing at thebitcoinlayer.com. Links to the book on Amazon, links to our show, both on YouTube and audio, links to our newsletter and our quantitative service, TBL Pro, for subscribers. If you really want to get that macro numerical analysis and dive into the markets and market technicals and how we view Bitcoin from that perspective, everything that we're doing at thebitcoinlayer.com.
Thank you, Nik.
Thank you. Grazie.